Welcome to Lock in Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning. Welcome to the Lock in Your Success Options Trading for Income Weekly Update for October 12th, 2015. If you're watching this on YouTube or listening via podcast, come on over to our website at lockinyoursuccess.com. That's L-O-C-K-E, inyoursuccess.com. Join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also, while you're there, come on over, check out our trading programs. We have the super simple spread trades, the M3, the bearish butterfly, the rock, the M21, as well as APM squared. In this update, we will be covering 4 trades from programs that we have. We'll be covering a bearish butterfly, an M3, a rock, and a V condor, which is in the SSS trading system. As far as new and exciting stuff we have coming on up this week, I'm actually going to just pass this over to Sherry, and she is going to go ahead and tell you about it.
Good morning, traders. I am excited to show you the Locke options community. I had to take a sneak peek, hoping to get this out to community coaching people this week. So this is not only a forum, but it is going to be a community where you can come in and have discussions and so forth. I'm just going to show you some of the options that we have here. So there's groups that are set up, and so we've established some of those already. So the programs, the programs that we have, and trading psychology, so you can come here and ask your questions. And then then there's also the discussions that are going on. You can come in here and see your discussions and responses to those. You can see the members. You can friend members. You can follow members. So if somebody says something, you're going to get notifications as to if you're following them, what they've said. And that's what the notifications is. In activities, you can see all the activity that's going on in our community. And then also another exciting feature of this is that you can add pictures, videos, and links. So when John makes a response, he can actually make a short video and upload it here for everybody to view. And then we also have the discounts that come with the community, if you're a member of the community. And then also we have some really great resources here for you. We have the T-logs from these updates, and then we have option view recommended reading lists, the trade plan critical elements template, and then some option view tips and tricks. So I just wanted to give you a quick overview of what's in here so that you could have a look at it, and then hopefully we'll see you around the community. Thanks, everybody. Here's John.
All right, also, and I'd just like to mention, too, that we are going to be, obviously there's not much content in here right now. We're going to be gradually introducing members-only content as time goes on. Of course, we're going to have members in here asking questions and helping each other and stuff like that, and that's going to be really great. So hopefully that will be online, at least in beta testing with limited numbers this week, and hopefully opened up to everybody within the next week or so. So that's going to be really, really cool. Yeah, right now we're working solely on getting that done. So pretty exciting stuff there, and I think this is just going to be fantastic benefit or help to way to get help and support for anybody who's interested. All right, so let's move on. So looking at what's happening in the markets. So the Russell in the last 6 trading days has decided to gain 85 points coming into expiration week. Not the best combo for market neutral traders who happen to be in October trades. I would not call that neutral at all. We're kind of crashing up, as they say. So, where do we, we kind of expected the market to continue up here. I think last Monday I was talking about the market coming in at less of the market rising or going up at less of less intensity. So I kind of expected the market to track a little bit more along this type of an angle coming up, closing into expiration up here at somewhere in this red circle. Now, that said, I'm still would expect, or I think there's a good possibility that we do still expire in the red circle. It's just that we came a little bit higher than I thought, and we're likely just to come up here and back down a little bit into here towards the end of the month rather than grinding up is what I thought. That said, we are at an area, I mean, this was a very intense run, and there is a possibility that we may continue up to the 1195 area, but this is an important area here. I would say that if we break or we close over this trend line, what I just told you about expiring here is much, much less likely at that point. We're probably just going to be straight up into expiration. We have been having run-ups into expiration much more frequently than we've been having pullbacks. So from that perspective, the odds favor us going higher. But I still think that we're more likely to come down into the circle. And if we look at the SPX, for example, we came right up into here, which is our previous top. We sold off hard off that level last time. We'll have to see. Again, I would think we would get some sort of a reaction off of this, whether it be a sideways move or a slight pullback. If we do not, SPX is clearly coming up into here, which is around a 2040 area, which is going to be another 25 points or so. If that is the case, then we'll probably be looking at the Russell coming up another 25, 15 to 25 points up into this 1200 area. So basically, we're at a decision point. And like I said, I'm favoring dropping into here for expiration week. That would be good for the trades as well. But it's also not out of the question that we may make a run for previous highs here. And if we stay at this, if we keep going up at the pace we've been going up, which is certainly possible, we're looking at the 1200 range. So those are the two most likely scenarios I see coming forward. I just don't think we're going to get another big breakdown like we did here. But time will tell. All right, so moving forward here, let's take a look at what we got on for trades. So this October M3 trade has been knocked all over the place. We got in this 56 days ago. We are just kind of been treading water most of the month here. We got knocked down with that virtual market crash we had back at the end when this was early in the trade, and we came back from that. Then we had another big pullback. We came back from that, and again here we are sitting as of Monday in this position here. We are obviously past a roll-up point here with this, I think it was like a 30-point up move by the end of the day. Obviously past a roll-up point, so that's what we did here. We just came in, we sold off this existing M3 position, which was essentially centered at 1070, and rolled that all the way up to 1100, added in 5 1100, 1120 verticals, 5 1100, 1130 verticals, and of course we have the call in here still. And that brought us to a position that looks like that. The market continued to rise, so what we ended up doing on, let's see, Tuesday was flat. So nothing happened on Tuesday. Wednesday, we continued up higher, had started having a delta problem outside the tent here. So we came in, did 5, 1120, 1140 verticals, flattened us out a little bit into a position that looks like that. Thursday, we had our continued up move, which once again threw us past our long strikes, more than 10 points past our long strikes. Also, by the end of the day, by 15:30, we're also Vega positive, which prompted another roll-up. So from here, what we ended up doing on Thursday is we rolled from 1100 to 1120, just up 20 points. And you'll see that here. Roll up to 1120. We added 5, 1120, 1150 verticals and 5, 1120, 1160 verticals. Also, because we're getting late in the trade and the way that pricing is, and we've had to roll this all over the place, we actually had capital problems. We started pushing over $50,000 capital, which is our capital limit in this particular trade. So I ended up, we had a 1050 call. It was way down here. Prior to the roll, we rolled that up to 1100 to bring the capital level down. Normally, with our short strikes at 1120, we're going to have our long strikes at 1070. We rolled those up, I'm sorry, at 1080, I guess. But anyway, we rolled those long strikes up to 1090 to bring our capital level within reason here. And this is what we look like from that standpoint. And of course on Friday, let's see, we get any, yeah, Friday we got a continued up move, or at least it kind of hung here. And because we're close to expiration, we're going to be getting a fairly rapid change in our T+0 line here. So we did another minor adjustment, which was just simply sell 3 1150, 1160s, which you'll see those options move when we push into the following day. It's being a little slow this morning. Actually, it's being very slow right now. Oh, there we go. So you can see the 3 1150, 1160s brings us to minus 50 delta approximately outside the tent. We are slightly down coming into this, something like this at as of Friday. So essentially here with the M3 trade, it's going to kind of work out like this. If the market continues to fly up, we will likely exit this at either a small loss or break even or maybe a very small profit. If the market actually does something a little more reasonable and at least backs off 20, 30 points, then we should be able to actually pull something out of this, but it's not going to be a profit target month for sure, right? So this has just been a really tough month with everything rolling around. So basically what I'm going to do here during the week is I'm going to exit this when I pretty much have, if I get to the point where I have either a reasonable profit, we'll exit this out, or, and by reasonable I mean even a 3 or 4% would probably be okay for something like this. If we get into a position where I have to take on too much downside risk, I'll exit it. Other than that, we'll stay in it pretty much most of the week. So that's how we're going to handle the position coming into the end of the week here and into the end of this expiration cycle. So a very challenging trade there. And that's what's going on with the M3. Now, we also had a rock trade on, and if you look at what's going on with the rock trade, it was in the same position as the M3 trade on Monday before adjustment, or a similar position as an M3 trade. It was M3 configured. So if I come in here on Monday and then I switch over to the rock position, here is what we look like. Again, almost identical to the original M3 trade. This being a rock trade though, we do a rock entry test if we outrun the M3, which we did, and we'll convert into what we call a rock positioning. Now, from a rule standpoint, we do this completely by guidelines. So, you see the good, bad, the ugly, however things work out. If I'm reading the charts and looking at what the charts are doing, I would probably prefer to have a rock trade at 1150, 1190, 1210. If the market breaks out or wants to make the run for 1210, then, or I'm not 1210, but maybe 1190, 1200 into expiration, which is typically what it has been doing, I would prefer to be that way. However, if I switch into a rock position now, I'm going to have to go into maybe an 1120 rock trade. So the live trade, I might have rolled up this is an M3 and kind of waited this out. But like I said, we are just running by guidelines here. So what we ended up doing is doing that. We came into a 10 butterflies at 1120. We sold the calls. We bought 6 butterflies at 1160. Ended up in a position that looks like this. So that being the case, what we would like to see is just essentially for the market to either slow down or maybe reverse a little bit. We've taken on additional negative delta. We've taken on an awful lot of gamma, but which is going to be very, very good for us should the market stall a little bit here. And you'll recover very, very quickly and come up into a profit zone and be able to dump out of this thing. However, that didn't happen, right? The market just continued up relatively quickly. So if we switch to Tuesday, I don't think there were any adjustments here on Tuesday. There were not. Wednesday, we ended up having a delta issue. We hit our maximum delta limits in this trade. So what we ended up doing is buying, let me just go back a half an hour here. All right, so this is where we were sitting here with 10 1120s, 6 1160s. We added in the rest of the, scaled in the rest of the way with the 1160s, and then we started adding our 1180s in here. And that ended up in a position that looks like this. So what we're doing is we're just kind of scaling into the top of this. I just have a quick question. It just says, how do we, what is the rock entry test? Essentially, the rock entry test on whether you can go into rock position or not involves buying a butterfly 20 points under the money and checking the delta of that butterfly. That's 20 points under the money, or what the delta is of the butterfly. That's 20 points over our short strikes. And that's how you determine that depending on that number. And in this case, this is primarily because we're so close to expiration is why that's even possible. So in this volatility environment. So anyway, we cut down to around 180 here. Thursday, obviously the market continued higher. So what we ended up doing Thursday is buying the rest of these 1180s and starting to scale out of these 1120s. We're essentially going into a triple entered bearish butterfly here if the market continues up. So moving forward, you can see we cut back some of these 1120s. We're fully into the 1180s. We're fully into the 1160s to a position that looks like this. And then Friday, moving forward to Friday, I think we sold off a few more of these. For some reason this is having trouble advancing into October 9th. I don't know why. It's just very slow. But here we are. I sold off 2 more of these 1170, these 1160 butterflies. And the position looks like this. So this is going fine. This is the point in a rock trade that I don't like to be in. I don't like it when it goes into a triple bearish butterfly style into the week of expiration. Not particularly fond of that. Should we have to go completely into that configuration, we will be dropping our target to 10%, which is very realistic. If the market stays relatively calm, if we have maybe 2 days of flatness in the market, then this is very possible. This will hit a 10% number fairly quickly because the money comes into this very, very fast, and we can just exit this. So basically right now I'm looking for an opportunistic profitable exit on this particular trade. coming into expiration week. If we can do that, it will be done. If not, we will move on. We take what we have, right? So that's how the rock trade's sitting as of right now. Like I said, I would have preferred to be in the 1150, 1190s. That would make a really nice positioning here, but didn't work out that way. All right, did I use puts rather than calls for the upper butterflies because you were going into a bearish butterfly configuration? You're right, so I should address that. In the program, typically when we get into these 1160s, we usually do call butterflies, and typically when we get into these 1180s, we usually do call butterflies. Realistically, it doesn't matter if you do put butterflies, call butterflies, or iron butterflies, whatever your preference is. Well, I would avoid doing call butterflies because everything, at least on the lower butterflies, because everything is tends to be in the money, and it's not. And for the most part, the markets go up. So whatever you enter with your lower butterflies, most of the time you're going to have to move. So typically I'll stay out of call butterflies for that. I usually like to start with put butterflies in general. Nothing wrong with doing iron butterflies. Iron butterflies would be my secondary choice, and sometimes even my primary choice to do those. Realistically, for a demonstration point of view, I like to do my demonstrations with all puts because it's cleaner. Right, so it's a little bit cleaner. Usually if I have to add butterflies over the money, like if I had to buy 1180s, normally in demonstrations I'll go to the calls and do them in the calls. And again, for the same reason I'm doing them in the puts before, is because they'll probably expire out of the money, at least most of our option strikes. So a lot of times I'll do that in calls, and that's when we do that in the program with calls. I would actually prefer to see people in call butterflies up here, and certainly when I added the 1180, I would prefer to see people in general in call butterflies. For me, it's habit and what I'm used to. I'm used to using call butterflies. I'm used to using put butterflies, and I just, if I was thinking about this, I would have put them on the call side, but I really wasn't. So typically my default is just to use put butterflies. It makes the decision, it makes the positions easier for me to look at, and it also makes me less likely to make a mistake, because if I'm, if I'm used to, and the same thing with you guys, if you're used to dealing with puts all the time, and then all of a sudden you have to deal with the calls, then you go to put an order in to sell something, chances are if your focus isn't 100% spot on, you might buy call butterflies, and when you go to sell them out, you sell put butterflies, because most of the time you're used to dealing with put butterflies. So mainly for that purpose, and mainly because that's what I'm kind of used to, and if I don't think about it, that's what I'm going to do. And secondarily, if I'm live trading, a lot of times I'll just use all puts, because a lot of times I don't want to get, it helps me avoid execution mistakes. So mainly the reason that I would do that. All right, so synthetically it doesn't matter, but I just happen to use puts there. Moving on. I said, what would constitute too much downside risk? That was actually done a few minutes ago. So too much downside risk, I guess that depends on what format you're asking me that. Usually I like to have 30 points without hitting an absolute maximum loss number. So here, 30 points under here, 1165 is 1135. That's right about our maximum loss number there. So that's perfectly reasonable. Sometimes in a rock trade I will push that a little bit. In an M3 trade I will not. So that's what I usually like to. I like to be aware of what a 30-point move is going to do to me, and make sure that's acceptable to me before I deal with that. And he may have been referring to the M3 trade also when he asked about too much downside risk, and by that I mean we had too much planned capital in the trade. That being the case, we also have too much in this trade, by the way, but I'm not going to fix it here. We do have capital reduction techniques to bring this down. This is at 67.5 from a capital standpoint, which is easy enough to bring down by simply, bringing these in a little bit, right? So this does virtually nothing. This does virtually nothing to the trade as far as Greeks levels and stuff, but it, very, very little difference here. And it brings your capital right into line as opposed to where it was, right? So very similar T+0 line graph, very similar profit potential. It's just it brings the capital level down. I usually don't get into that here because it tends to confuse people. So let me just clear those out. Anyway, this is where we're sitting as of Friday. Couple of slow days here. This will be looking fairly healthy. Okay, do I recommend anyone do an M3 or bearish butterfly in SPX instead of Russell? I mean, you can do them in SPX instead of Russell. You do have some nuances that you have to deal with, so you do need to modify the systems a little bit to work properly. I mean, particularly, the M3, you can run 50-point wings in the M3. It's and run the same capital levels. It's a little more challenging in the SPX because it does tend to move more points. Most people go a little bit wider with the wings, 60, 70 points. Of course, that's going to raise your capital limits, but and essentially keep the same delta numbers, and it works fine. Bearish butterfly, you can do in the SPX if you're timing the market a little bit. I don't know if I would just do it as a straight out trade every single month without doing some modifications to that. So those are the two things with the SPX that I would think about if you were doing this. All right, October VCon, remember the October bearish butterfly closed at a very good profit this month, so that was good. And so that trade's over with. We do have a V condor in October, which looks or looked like this. Let me back this out. All right, so the market moved all over the place, didn't really require any adjustments, and ended up flat in the center. This is actually very, very unusual historically. It happens once every couple of years usually. Some oddball years it might actually happen 2 or 3 times, but very, very uncommon. So anyway, this V ended up really kicking the heck out of the trade. The good part is the big price moves didn't bother us at all. The bad part is, well, we didn't make anything. So you have to weigh that back and forth, right? So anyway, here on Friday, we did finally hit a positive delta limit in this particular trade. So if I go to Friday, I think it was Friday. No, it was Thursday. Right, so positive 50 is actually a delta limit within the trade. So that being the case, we did sell off this put here, and we did roll this call if we just go forward a half an hour. If we go forward, let's see if I can get some numbers in here. I ended up selling our 1140 put. I rolled our 1140 call to 1180 per guidelines. This essentially puts us in a place where this is going to expire, unless we get an explosive up move, this is going to expire at a $704 profit. Really have no downside risk here within reason. And if the market happens to take off, then we may, or we hit a positive, another delta limit, we can take a little more money out of this by guidelines. Like I was saying, I think last week, I probably would have pulled the straddle out of this last week with the way that the market's been moving. But we just wait and do like I said, for better or worse, we're just doing these the guidelines. So that is all the October trades. I just got a couple questions here. With this rally, is it a good time for a bearish butterfly for December? Yeah, so here's the thing with that. My answer to that is yes. With the rally that's up here and the days to expiration for December, it's a very high probability trade or a high probability entry where you're not likely to draw down ahead of time. Just because something's a high probability or a good entry doesn't mean it's going to remain the situation is going to remain that way for the remainder of the trade, right? So I know last month some people were looking at a November entry and they entered early. Now we're going to go over the November bearish butterfly, and by guidelines it's fine. It's drawn down a little bit because we just had this huge rally, but it's fine. However, we had people who entered the November early because we were in a rally, which is fine. That is a good entry, right? If you're going to modify your plans and do something different, it is a good entry. But just like I said, just because it's a good entry doesn't necessarily mean it's going to be good for the whole trade. So some people in November who entered early got kicked back on ended up hitting a rollback point right at the bottom of the market because they entered higher than normal. And that has, because of that, now they're struggling with this up move. So when you enter a December bearish butterfly, you need to keep in mind that most of the time December is a rally month. Not all the time, but for a large majority of the time it is. So while it's a good entry and the market's likely to pull back, you need to think ahead of time, think forward, and how am I going to handle this as the market pulls back, right? And deal with that, because that may put you in a position where you don't want to be in, right? So it's just a matter of thinking it through. So plan out the whole trade ahead of time, right? You don't just jump on it because it's a good entry. Consider the whole thing going through. But anyway, yeah, it is a good entry point for that. Okay, if the rut ran up to 1190 early this week, what would be a compelling reason to enter a December bearish butterfly? Just the fact that you're up over 100 points in the last 30 days is a decent reason to get into a December bearish butterfly. So like I said, all the other things I just said to Chan apply. And is it okay to enter a bearish butterfly for November today? Yeah, I mean, you can do what you want. I mean, you guys are breaking from guidelines, right? So we're doing technical analysis type of stuff. Yeah, I mean, you can enter a November bearish butterfly today. I actually entered some in, I think on Thursday. I went into some bearish butterfly trades on Thursday on top of my bull trades that I have in my retirement account. And I just thought it was a decent entry. So your criteria for entering a late bearish butterfly is that the original bearish butterfly is down a significant amount of money, which it's down a little bit. If you went by guidelines, your bearish butterfly, I think, well, we'll show you what it's down. If you went by guidelines, a November bearish butterfly is down maybe 3%. So that being the case, it might be a little bit more than that, but probably around 3%. That being the case, yeah, it's okay. Realistically, if I wanted to enter a really late bearish butterfly, I'd want to see myself down there maximum loss to do that. But I think at 43 days with the market up this far, it's likely to top out in the next 30 or 40 points, and the volatility is relatively high. That combination is it's a decent bearish butterfly entry. So I think that that would be okay. It's a fairly good probability trade, I guess is what I'm saying. All right, so let's go back to November M3. Let me go back to Monday here. And this is what we look like at the end of the day, but let me see. I think I made an adjustment this day. Right, okay, right. So on Monday, last time we checked, we were at the 1060s with our November M3 trade. Monday blew us way past our long strikes. Ended up doing a roll up to, I think 1100. Yeah, ended up doing a roll up to 1100, just a straight butterfly roll, so really simple move there. Then on the 8th, which I believe is Thursday, again with this huge, with this really aggressive up move here, we ended up more than 10 points past our long strikes again, so that just constituted another straight roll up. Because our delta's been reasonable the whole time, there's no reason to do any kind of verticals or anything. Another straight roll up 20 points to 1120. And as of Friday, which I'm not going to switch to because it's, for some reason option view is really slow going into Friday, but this is the same position. We made no other changes. So so this is what we look like as of Friday with our November M3. This is a really, really nice looking M3 trade. So I'm actually pretty excited about the way November is going. Let's see here. We also have a November V condor, which we will just quickly look at because I had no adjustments. Right, this trade was entered and essentially nothing has happened. And we're sitting here. So if the markets continue to actually grind up, then this actually looks pretty decent. We, if they stay sideways, we're going to run into the same thing in November as October. That's kind of unlikely. It doesn't usually happen 2 months, but it could. It could. So we're certainly aware of that. But as of right now, everything's going perfectly fine. And then we have the bearish butterfly. So let's take a look at that. So this trade, I don't think had any adjustments till this point. Right, so yeah, so we entered on the 25th. We've just been kind of sitting here. Here though, we, well, by the end of the day, right, not right here, but another half an hour, we exceeded this 1140 add point. I think it was on Monday. Let me wait. Oh no, I didn't, actually it didn't exceed that. So we were okay Monday. We were okay Tuesday because Tuesday the market went down. We actually didn't have an add on this till Wednesday. Right, so we've exceeded the 1140 add point, and therefore we add our second third. Our delta theta ratio is good, so no need in rolling anything. Add the second third here. Thursday with a continued up move, we just simply added in the last third. Right, and we're down about $1,900 as of Thursday. I think Friday it dropped the profit and loss down a little bit more because the market did go up a bit. So we're drawn down a little bit, but nothing serious. However, we are positioned completely awesomely or fantastically for the market to have a normal 40 to 60 point retracement here. It would be very, very good for us. That would probably bring us to profit target within this week if the market actually did that this week. You get a nice pop in the T+0 line, a nice pop in the value of the butterflies as soon as people think that the market's not going to go up forever, and that would probably bring us to profit target this week if that were to happen. I don't think that's going to happen, but if it were to happen, then that would be very good for us. Realistically, we have another roll point on this at 1170. So if we pop up over 1170 towards the end of the day, we'll be rolling these what are they, 1100s or whatever they are, or 1090s, I guess. No, the 1100s. We'll be rolling those up to 1160, and that makes this a really, really nice possibility with even a mild pullback to actually do pretty well. So I think this trade is looking pretty good, and people who want to enter now with a single at 1140, that also has a very good probability of making money, and the chances of you being actually outrun too far to the upside in November expiration are almost zero. So to me, I think it's a high probability trade. So so that's the thing to consider. Again, considering that if we get a reasonable pullback, how you want to play that, because you are breaking guidelines and you're no longer following the rules. So, but that said, it is a good opportunity for that. But anyway, those are all the positions that we have on at this point, and it doesn't look like I have any more questions. So yeah, it looks like we only have any. Doesn't look like we have any questions. So have a great week trading, everybody. Let's hope for the market to just settle in and maybe back off 20 or 30 points for a couple of days here. And those of us who are in October positions can actually make some money in October. That would be nice. Otherwise, it's on to November. November looks really nice at this point. So have a great week, everybody.